Hello everyone, I am happy to bring you the problem 93A for this week. As you can see, it's all in Excel so that it can be more convenient for me. Uh, there are a couple of things that I've added so that I can have some better explanation. As you can see, I calculated the book value and I had also annual depreciation and accumulated depreciation as well. So let's go in our problem and see what was said. We can see that the more important things for us are the cost, the total cost that they have purchased those equipment, and then the date, the purchase date, and also the useful years. Also, some of them have salvage value and some of them don't have. Okay, for the first item, it's machinery. It was purchased for this total amount, and then during that date, the useful year is 10 years. So, and then we can see that it was retired on January 1st in 2017, which means the company did not receive anything in return when they gave away that machinery. So this is why we can see here I put accumulated depreciation equipment, which is this amount. I get it here from the calculation that I had here. The annual depreciation, which is this formula, which is the cost minus the salvage value divided by the number of total of useful year, which is 10 years. It gave me this one for annual depreciation. Since the useful year was 10, the number of years that the company has used it until they get rid of it, it was 10. So I'll multiply this 10 by the annual depreciation. It gives me this quantity, so which is the accumulated depreciation for that equipment. And then I debit this amount, and then for the equipment which is not in use anymore in the company, I credit it with this amount. Okay, and for the second one, which is the forklift, to record the depreciation expense on forklift. Since the forklift was sent in the middle of the year, it was sold in the middle of the year in June, which means the annual depreciation is had to split and divided by 2. This is why we can see here we have the formula here, which is the total cost minus book value, which is 0, divided by 5, which is the useful year, and then multiply by 6 on 12, which is the half of a year, that we can have the correct quality for the depreciation for the forklift, because it was sold in the middle of the year, which is half of a year. So we have this quality here. And then next, we are requested to record the sale of the forklift. We can see that the forklift was sold for that price, and then I put it here as the cash, and I debit cash here. For depreciation, accumulated depreciation for the forklift, we had to know the one per year, the appreciation per year, which is this one here, and then the useful year for the forklift, it was 3.5 years. It was 3.5 years because it was purchased in 2014 and then sold in the middle of 2017, which gives us 3.5 years. And then we have this total when we multiply the annual depreciation by 3.5, and then I put it here. Next, we know that the equipment, it was cost 33,600 USD. So I credit this one here, and then I put equipment, and then now it remains to determine either we have a loss or a gain. To determine if we have a gain or a loss, this is why I calculate the book value here, and then with the book value I will determine, I will automatically know if I have a gain or a loss. How to know that? The book value, it is the total cost minus the accumulated depreciation. And then I have a formula here that I've created as well. If the book value is greater than the price that we intended to sell this item or this equipment, we make a loss. If it's less than that, we make a gain. This is how we can see here. And then we can determine if we make a gain, we have to credit it so that we can make the total quantity in credit and debit balance. This is why we have the 3,360 here as a credit. And then next we have to record the depreciation expense on truck. On December 31st, the truck was discarded, which means we don't have anything in return from this truck when we discard it or when we retire it. I mean that company. So, but it has a salvage value. It's different from the first two. And to get the depreciation is the same formula. We have it here already, the same thing here. And then I put it as debit depreciation expense and then accumulated depreciation expense, this one here. And then next, to record the sale of the truck, we had to note the accumulated depreciation for the equipment. The accumulated depreciation for the equipment is calculated by multiplying the annual depreciation by the number of years that we have used it or the company has used it. So we know that the annual depreciation is this quantity, and then the number of years that they have used it, it was 6 years. It is 6 years because it was purchased in 2012 and then it was sold at the end of 2017, which is the 31st December. So when we make the calculation, we know that we have 6 years that we have used it. So we have here accumulated depreciation, that quantity. And then at the bottom we had to credit the equipment because we are getting rid of it. It was this amount that we purchased it, so we have it here, this one. Now we need to know either we have a gain or a loss so that we can put it to know if we can have to put it in debit or credit. Same thing, we had to I had to calculate the book value. The book value, it is the same formula as you can see here, which is the cost minus the accumulated depreciation. And then the same formula here, if the book value is greater than the price that we intended to sell it, since the price we intended to sell it it's 0 because we didn't sell it for anything, so I put it 0 here. If it's greater, we know it's greater, so it already automatically is a loss. And then if it's smaller, it's a gain. In that case, it's greater than 0, so it's a loss. Since it's a loss, it's going to be debited, so I put debited here, that quantity, and then that's it. Okay, so when we see here, see that everything is correct and then everything is fine here. So if you have any question, comment, please let me know.